Welcome to the April monthly market report for Keeping Current Matters. Over the next few minutes, we're going to talk about some of the most important topics that are in housing right now. But here's what I want to say. On the front end, I'm going to talk just a little bit about the NAR settlement and maybe where our mindset should be right now. But then after that, we're going to hop into the three things that I believe are most important right now to buyers, and that's inventory, that's mortgage rates, and certainly that leading to affordability. So let's go ahead and hop in. All right, where I wanted to start with our NAR topic, the settlement and maybe mindset, is right here with the quote from Brian over at 1000 Watt. I think it's one of the best quotes that I've seen relative to this topic. He says, our recent research at 1000 Watt tells us that consumer sentiment on this issue is malleable and volatile. And I'll come back to that in just a minute. People have just been blitzed with the NAR agrees to slash commissions headlines that may ignite mass consumer price sensitivity. But behavioral inertia is strong, and it's a long way from a headline to the very personal and very serious decision to get help buying a home. I think Brian sums it up very well here in saying that it's malleable and volatile. Malleable means it can be changed, and that certainly is true. And volatile, we all know it's at a fever pitch and, has been covered over the last couple of weeks on Facebook, this proposed legislation. But what's more important is, what did people hear? And the old saying of what you say versus what somebody hears is very, very different. And I think there are a lot of different things that people heard, consumers heard, that aren't necessarily true. Our job is to step into the market and be the educators. As always, the old saying, everything's changed, but nothing's changed. The fact that we need to be the educator, we need to step in with the answers, we need to step in with transparency, is what we need to do right now. So, what I see a lot of times when I talk to folks and have done so over the last couple of weeks, and people that have reached out here to KCM is a lot of confusion. And I've had to give you maybe an analogy here. If you're going through a maze, confusion ultimately leads to fear, and fear left unchecked leads to panic. And then panic, if let to sort of go and not be controlled, leads ultimately to paralysis. And a lot of agents right now are paralyzed, not knowing what to do. And maybe for just a minute here, I'll remind you of a couple of things. First thing I'll remind you of is a study that Bright MLS did here of buyers, and they asked them the question, which of these following statements do you agree with most? When buying a home, you should definitely have someone who represents your interest during the whole process. 76% of buyers agreed with that statement, saying, I definitely need somebody. No, by the way, I'm willing to pay for professional advice in this market. I think it's critically important that you remember through this, people want advice, they're willing to pay for it. Second part of this survey, 91% of people agreed with it'd be very stressful to navigate the home buying process without an agent or broker. 87% said, I believe an agent or broker is an essential trusted advisor for the home buying process. Now more than ever, being the educator in the market counts. And that's what I want to maybe focus on for the next few minutes is how do we go out and educate about this market? That's what our job is. And, probably one of the best places to start is with inventory. And the question sort of on the table is, will inventory improve for the spring housing market? And I want to give you the latest information so that you can be the most educated agent on this topic and really cut through some of the information that people maybe are misinformed, maybe they heard something that isn't necessarily true. But let's start off with Realtor.com. The inventory of homes actively for sale increased in 45 of 50 of the largest metros compared to last year. And in 4 large metros, inventory was above pre-pandemic levels. So we're seeing inventory, active inventory growing, and there are a couple of reasons for that. But if you look at the overall change year over year as of March this year compared to March last year, you see the national average 23.5% growth in inventory. And you look across the country, depending on the state where you're at right now, you can see how much inventory is maybe grown. A few states where inventory is contracted, but the overwhelming majority of states show that they have more inventory today than we did last year, and that certainly is a good thing. Realtor.com went on to say for the first 3 months of this year, the inventory of homes actively for sale was at its highest level since March 2020. However, while inventory this March is much improved compared to the previous 3 years, it is still down 37.9% compared with a typical 2017 to 2019 levels. So more inventory year over year, down from the pre-pandemic levels. In March, as in previous month, the growth in homes was particularly priced in the $200,000 to $350,000 range, outpaced all other categories as home inventory in this range grew by 30.5% compared with last year. So that's a good thing. Homes on the lower end of the market, inventory growing there, that's what we need. I think one of the best graphics to show this is this graphic right here. And it shows the last few years, 2021, 2022, 2023, and then you see the dark green bar here, March 2024. You can see active listings higher than the last 3 years. But sort of to put this into perspective, if you start to overlay the years prior to that, you see them right here. So while we are improving over the last several years, not where we were in 17, 18, 19, 20, and we certainly know the story of that through the pandemic, inventory being depleted. But what we want to see across the country is more inventory coming back into the market to give people more opportunity. There's very few markets, if any, where people say we have plenty of homes, we have the number of homes for the people that want to go out and buy them right now. So this is a good sign. We want to see that. Active monthly listings, if we sort of take a look back in time just a little bit, this graphic right here, I think is very, very interesting. And if you look at the sort of sequence going back to January of 2022 on the left side here, sort of this fall, January, February to March, in active monthly listings. Certainly that was true last year in 2023, but different trend this year. Go all the way to the right side, January, February, kind of, sort of even, and then jumping up a little bit, seeing more active listings in the month of March, which is a good thing. Providing a boost to overall inventory, sellers turned out in higher numbers this March as newly listed homes were 15.5% above last year's levels. This marked the 5th month of increasing listing activity after a 17-month streak of decline. The fact of the matter is more people are stepping out and listing their homes. More people that didn't make a decision last year to do something to list their home are doing it this year. Certainly there's more active inventory due to things maybe staying on the market longer, but it's absolutely true. There are more newly listed homes in the market. This graphic right here is proof of that. And you see year over year, 2023 in the blue, 2024 in the green, each month of this year, January, February, March, we've seen more homes listed than we did this year. Last time, this is an opportunity for buyers that want more choice in what they're looking for, and we certainly want to see that across the country. Consumer attitudes towards home selling conditions increased markedly in February, with current homeowners in particular expressing greater optimism that it's a good time to sell. A development that may foreshadow an upcoming increase in existing home listings. All of this bodes well for home buyers, more inventory in the market, certainly what we want to see. It's what we've sort of struggled with over the last several years. And while we're not out of the woods by any stretch of the imagination, maybe we're slowly making our way out, and we want to see that continue. Probably one of the biggest topics over the last several weeks, and certainly coming here into April, is the topic of mortgage rates. The volatility in the market, all these economic indicators from unemployment to inflation to things that influence the economy affecting mortgage rates, truthfully. And there are a couple of things there. One, what's the Fed going to do? I want to talk about that for a minute. But ultimately, what does that mean for mortgage rates? Where do we stand right now? Where are we heading this year? And how does that then impact affordability? I want to spend maybe the bulk of our time here talking about that topic, because it's what we need to be vocal about right now. I'll start here. NerdWallet said this: the Federal Reserve influences mortgage rates but doesn't set them. At its March 20th meeting, the central bank kept the Fed funds rate unchanged and said it will keep an eye on economic developments to decide what is the next rate move. Mortgage rates are influenced by many elements, including inflation rate, the pace of job creation, whether the economy is growing or shrinking. Federal Reserve's monetary policy is a factor too, and is set by the Federal Open Market Committee. So when the Fed met last in March, as of the recording of this, their decision was to keep the federal funds rate steady at 5.25 to 5.5%. Now, as you look forward to what the Fed is going to do, it's not about the Fed, lowering the Fed funds rate, and that's the mortgage rate. It's not true. We've talked about that a lot on the monthly market report. But their action will be a greater indicator of what's happening in the economy. Now, I will tell you this. As you look to the May meeting for the Federal Reserve, it's about a 0% chance that they would take any action. You then go to June, and I'll tell you that the chances of them taking action has fallen, but as of today, it was about 60% that there'd be a quarter basis point cut. I expect that to fall as we go through June. But Forbes said this, I think it's really good. They said the current expectations of the Fed will start to cut rates some point between June and September. The exact timing depends on how incoming economic data looks. The Fed's March meeting did not set up the prospect of a near-term interest rate cut, but a summer cut appears likely. Well, I think right now trying to, sort of guess what the Fed's going to do is a fool's game. Nobody knows that, but the best minds that are thinking about it see the summer to the fall when the Fed might be beginning to cut their projections. Now, I'm going to give you here in just a minute what the 2024 projections are for mortgage rates, but I think that's largely going to be dependent upon the path of this economy. But when we look out at what folks are saying, Fannie, MBA, NAR, on Q1 through Q4 of this year, it shows a downward trending mortgage environment. Now, that's dependent upon the Fed taking action and ultimately cutting the Fed funds rate, us moving through some of the uncertainty in the economy. And we certainly want to see that. I will say this, we've talked about this before, but we are in a demand-based rate environment in our business right now, and really 6.5% being the dividing line between limited and weak demand to good and then even strong demand. I think consumers realize that we're not going back to 2 3/4 mortgage rates anytime soon, 3%, whatever the case is. But we want to see a little bit of relief on this. People are active and out there, but I think as we go throughout the year, there's a very likely chance that we see more activity in the second half of this year than we have in the first half of the year, and that will be a good thing. Lawrence Yun said that the housing demand has been on a steady rise due to the population and job growth, though the actual timing of purchases will be determined by prevailing mortgage rates and wider inventory choices. What we all want to see is a little bit of relief on rates. That makes homes more affordable. We're going to talk about that in a minute. But it takes more people from not doing something to say, okay, now we're going to do something. Now we can afford what we want to be able to afford. We want to see that happening. But our job right now is to be the educators, to be the ones that are out there talking about exactly what's happening in this market, talking exactly about what we see relative to the inventory pieces, the mortgage pieces, because that bodes well for people that are wondering, should I do something right now? And maybe they've been told you can't afford a home, or interest rates are somewhere they're not. There's so much misinformation, even with the NAR commission legislation. A lot of misinformation that's out in the marketplace that I think now more than ever we can step into and be the knowledge broker. Jetta Cushy said this: when you zoom out, affordability is still very, very low from a historical perspective, and that is absolutely true. And the question I would sort of put on the table right now with affordability is, it's a challenge, but is it as big as a challenge as maybe we've made it out to be? And I think there are some areas that we can be the educator on affordability right now. But if you look at the graphic from NAR on the Housing Affordability Index, remember this graphic is the higher the index, the more affordable a home is. So the lower the index, the less affordable a home is. And what do you see on this Homes, but by that measurement, are less affordable than any time going all the way back to 1990. Realize that. That is a fact. That is truth. And even if you look at the last 10 or so years coming out of 2008, those are the orange bars there, the years when distressed properties dominated the market. We've been in a time of historic affordability. And now we've sort of, it's like, the fastest rise in the 30-year fixed mortgage rate, all the things that we know that bear down upon this market, prices, all of those things. And the reality is, this is what maybe media, this is what others have taken and run with. And it is true. I'm not trying to say it's not true. But there are three things that affect affordability. There are wages, what people are earning. Mortgage rates affect affordability, and home prices affect affordability. Those are the three things that go into the equation of how affordable is a home right now. Well, this is the area that we can step in right now. This is a piece of, if you're thinking about building a piece of content or doing something or using a KCM blog, this is what I would be talking about. So what are the three things we know right now? Well, first, we know that wages are climbing at a faster pace than they have been previously. This graphic goes all the way back to 2006 and shows the trajectory from the Fed of weekly wages. And you see there's a sort of growth from the trend line there in wages. People are earning more money. And I think we know that. Inflation certainly impacts that. We know that people are earning more. Second, I just covered it. We know that mortgage rates are in a downward trending environment. So that leaves prices. What's happening across the country with prices? Well, if you look at the 2024 home price forecast right here from the 7 that we follow, that forecast home prices this year, we see 3.5% on the average. I think it'll be a little bit higher, maybe in the 4 to 5% range of 2024 home price appreciation. The good news there is it's not what it was in the last couple of years of 10, 15% home price appreciation. So what's my outlook for affordability is it will get better, right? Interest rates, mortgage rates come down, wages continue to grow, and we have less appreciation than what we've seen in the market. That bodes well for anybody wanting to buy a home and really wanting to be able to afford a home. And I think it understates the fact that you must have a relevant market opinion based upon the facts right now. When you have a relevant market opinion based upon the facts, it changes the conversation from my opinion versus your opinion to your opinion versus the facts. And I think that's really the point, is that if we can have more conversations about the facts and what's actually happening, we can then equip people to make the best decision for them and their family. We always say, here we in our office, when you come in, there's a wall that says we believe every family should feel confident when buying and selling a home, and that's what drives the work that we do. But the way that you do that, is the way you help people feel confident, is by being the educator. And one of the areas that people lack confidence right now is, should I buy a home? Is it cheaper to rent a home? And maybe in some markets, you could say, hey, on paper, it's cheaper to rent. Realtor.com said this: among the top considerations are the financing cost and the benefits of renting versus owning. And one approach is to compare the monthly cost of renting a home against buying a home. With such cost comparisons, we can identify whether the market favors renting or buying. This is particularly important given today's landscape marked by elevated rates and still high home prices, posing substantial challenges for would-be homeowners. So I want to break this down real quick, because in some of the recent information that's been put out there, we can tell what the average price of a rental is in this country. We can tell what the average price of a mortgage payment is. And I would really even take this and some of the information and even do in my own local market a sort of a study. And I would give people this information. So let's kind of hop into this. The February 2024 rental report from Realtor.com and NAR shows that this is the median asking rent, the 50 largest metros, studio, 1 bedroom, 2 bedroom. Overall, we call it the average, $1,708 overall average rental price. And you may say, hey, in my town, it's this, or this is what the average mortgage payment is. The average monthly mortgage payment in this country, $1,984. So there's a difference there. You could say on paper each month, it's cheaper to rent an apartment than go out and pay a mortgage payment, and you'd be factually correct. Okay, this is where this argument comes from. And then there's all sorts of arguments that come in. Well, you can get a bigger home and you know, the size of the apartment, all those kinds of things. But let's just kind of go down this line of, if $1,700 is the average rent in this country, a little over $1,900, almost $2,000, the average mortgage payment, just kind of hold that in your mind, because our research team did some great work on this. And then you say, okay, if you bought a home right now, it would cost you in this model a little bit more, but what would happen over the next 5 years? Well, we can go to the home price expectation survey. We know that, and say, okay, based on the appreciation that's being forecast in the home price expectation survey, remember that's 100 economists and housing market experts that say what's going to happen. The average priced home in this country stands to gain about $83,000, a little over $83,000 in equity. So would it be worth paying a few extra dollars? The difference there is actually $276 in that average sort of scenario to buy a home. Now, that certainly must take into consideration that you have the extra dollars to be able to go out and do that. I'm not taking that into consideration. But let's assume that somebody says, okay, I could afford $276 extra dollars in my budget to go out and buy a home. What would that look like? Well, if we do the math here, the equity and appreciation, I just said $83,000, $385. That's what you stand to gain by buying a home today in the very average scenario, very normalized appreciation. If we take 5 years of, I'm going to call it that extra bit of a payment, because that assumes you have a housing cost that's going to be there whether you rent or you buy, you still stand to gain just over $66,000 buying a home today versus renting. So is it really cheaper to go out and buy? I mean, is it really cheaper to go out and rent? Sorry, I misspoke. Well, you have to look at that. And I think being able to bring a conversation to people like the conversation of equity, because equity always defeats sort of the monthly payment argument. Equity always defeats, is it cheaper to pay a rental payment versus buy a home? But no doubt, it's out there, it's real, and homes are less affordable. Our job is to step in and be the educator. Step in and help people make a wise decision for they and their family. Wrap on this from NerdWallet. From high prices to low inventory, potential home buyers know it's gnarly out there. But if you're ready for home ownership, the long-term benefit of buying often outweighs the pain of toughing out the search even these days. On the monthly market report, we want to give you everything you need to be the educator. And I have one more quote that comes from KCM founder Steve Harney that I want to cover. But our goal with the monthly market report every month is to give you what you need to be able to stand out in the crowd and be the educator. And in this market, I think that is now more than ever critically important. But I pulled this quote the team did, and we put it in here. It was something Steve had said in a different crisis, but he said this, and I believe it, absolutely to be true as we go forward. The character you show over the next 60 to 90 days will play a huge part in the reputation that you enjoy over the next 10 years. And that is true in this market as ever it has been. Understand the facts of what's going on with the NAR settlement. Be the educator and step out and show people the way forward. That's our goal. That's what we want to give you. As we wrap here today, we're grateful for everybody that watches the monthly market report and uses that information to be the educator. We'll see you back again next month.